just wanted to start this new trading challenge. So you'll see just a couple days ago, I restarted this account. I loaded 25,000 in here. That may be a lot for some people, but the reason why I did this to do the $25,000 challenge is with stock accounts, you have to keep a balance of over $25,000 by the daily close to have these unlimited day trades you see here. Unlimited. If not, you only get 3 day trades during a week if you have less than 25,000, which could be totally fine for beginning traders. You may not need many trades, and you should probably practice more swing trades instead of scalping just to start. It gives yourself a little more wiggle room rather than trying to have a successful trade in a short period of time. Scalping can be a little more advanced, so maybe start with some swing trades. As I covered yesterday, we got some shares of Amazon. So far, I have 50 of those. Looking to build another 50. Seeing if this price will come down closer to $89. And then my thought is, behind some of these are Bitcoin mining stocks. And you can see I've got several reasons why I believe Bitcoin and cryptocurrency, a lot of them have bottomed out for this cycle. They had a very large black swan event. And then we got the monthly accumulation distribution. We have weekly bullish divergence for the first time. I'll show you here. See this? Let's go to the weekly. Hide all these drawings. Hide these moving averages. And what you'll see here is prices going down, right? Let's put a little trend line here, right? See, price going down. But over here on this RSI, it's going up. So when your relative strength index, RSI, is going up, but price is going down, you have bullish divergence. Now that is real bullish divergence. That's the true definition of bullish divergence. There's a lot of different bullish divergences and bearish divergences. You'll see this is a hidden bullish divergence. There's hidden, there's phantom, but this is the first true bullish divergence on the weekly that I've ever seen in Bitcoin's history, at least on this Coinbase chart. So that's pretty amazing. So I'm thinking we've seen a bottom in Bitcoin. So what I wanted to do is get some swing long positions on some Bitcoin mining stocks. I do trade crypto on a different account. I really don't want to show that account. So I'm just going to stick to this new stock account here. And we're just going to try and grow this, start with 25,000 and grow it from there. Today seems a little flat to start off. Dow Jones down a little bit. S&P 500 down. We have a little bit of the PPI came in a little bit higher than expected. So the markets are having a little pullback today. So we might have a pullback to close out this week. But either way, I wanted to build a few positions for some trades that I think will do very well over the coming days and weeks. So I'm going to build into some of those positions. Most of my positions are pretty small and flat. The reason why I'm starting with some small positions is I don't want this account to go below $25,000. So I'm taking some smaller, safer trades to minimize my losses, because when I first start growing this account, I'm going to be a little bit less risky. And that's because I need a little buffer here before I can take some actual risks, right? I need to grow this account to at least like 26, 27,000. Then I'll have a little buffer to take some larger trades. So that's my thought behind starting this account this way. And I used Webull years ago, probably about a year ago. I sold most of my stocks November and December last year, and then I just sat in cash for a long time and started trading again just a few months ago. But have done very well so far. Bear markets are really hard to trade in, first of all. It's just tough. It's a tough market to trade in. It's really choppy. Um, there doesn't seem to be a real direction, and everybody's just kind of playing this guessing game on, when will the Fed pivot? Has inflation peaked? Which I think it has. There's a lot of economists that are really smart that say it hasn't. So this is one of the most confusing bear markets we've had. Normally, you'll have a lot of consensus across the board with top level economists and hedge funds and things on which way they think the market's going. I've seen many economists think that the bottom's in, and then there's a lot that think it's going to get much worse next year. We'll have to take it month by month. So far, the data is looking like it's been improving lately over the last few months. Now, of course, we'll need to see if that continues. So let's build off of these. I wanted to get into Canon, Riot Blockchain, Bitfarms, CleanSpark. This FSD Pharma, I'm just going to close this one. It's kind of a pump and dump penny stock I made some money on in the past. Wanted to see if I could catch that little pump and dump again. Actually, I'll just leave that there. It's only down $7. But I'm looking for. So I really like to map out Bitcoin whenever I'm trading crypto related stocks. And it's kind of going to tell me where it's going. Now, what I'm seeing here, we can pull this out. We've been in a crash mode for a year. Since November of 2021, we put in our high and been coming down ever since. Now, if you look here, we looked as though we had bottomed and started curling up, right? So it looked like Bitcoin was already going to recover here, right? Lowest low here after a large capitulation event. Then you have this rounded bottom here, and we started heading up, and then boom, FTX news started breaking. These first 2 days is when CZ Binance was, starting to tweet about he doesn't think that they have the collateral behind all their positions, basically. And then you saw here all the customers of FTX started to do a bank run. Basically like a bank run. Everybody started pulling all their crypto off the exchange, selling what they had, absolutely collapsed this price. That was another very large capitulation event. I've never seen so many old accounts, very old accounts, like some people that have been trading crypto for 5 to 10 years. Some of them got in from the very beginning, and they were, some of them capitulated. They said they were giving up. They were unsure of the market, started to lose faith, and it's just one bad actor. That's like saying after 2008, when Countrywide Mortgage collapsed, that mortgages are done for good. It's just not the way it works, right? Does Bitcoin work? Yes. Does it serve a purpose? yes, you can bank yourself. The whole purpose behind it is to bank the unbanked, really. There's a lot of the world, it might be close to 50% of the world doesn't even have a bank account. I don't know that exact stat, so don't quote me on that, but it is very high, right? You have a lot of a lot of nations just don't have the infrastructure for proper banking, and the people that control the banks are private um, Federal Reserve banks, right? And there's basically one family owns all the Federal Reserve banks in the world. People think that they're government entities. They're not. They're private banks, and they create the money. So you're playing by their rules by using any bank. Now, I'm not saying I'm like a conspiracy theorist and thinking that all these banks are going to collapse and all this. I'm not saying that. What I am saying is that in 1971, the Bretton Woods Agreement was agreed to, and then money became backed by nothing, and it's just paper. It used to be gold backed and silver backed. You could actually go turn in your notes for gold and silver. They were gold and silver certificates. It was written right on the bills. After 1971, all that changed. Then we came to fiat money. And then what you've seen um, since then, this is a really interesting website. WTF happened in 1971. Look at that. Growth in productivity, hourly compensation. Once the banks figured out, once the Federal Reserve banks figured out they didn't have to back the money by anything, everything changed. So without going on a super long history lesson, check out this website. WTF happened in 1971. Very interesting. It shows you what's happened to the money. Um, the value of money has dropped so much since then, and that's to me why I'm bullish on Bitcoin long term. Right, just a different kind of money. I also like gold and silver, and I really love real estate. Real estate's my favorite. Hard assets to me are better than fiat money. Right, so I'd rather park most of my money in hard assets rather than sitting in a bunch of money that's just printed like they did over the last couple of years. Either way, my thoughts behind some of these um, minor stock trades is I'm starting to see a same little curl up, right? We were headed down in this little downtrend here. Then we broke above it. Now we're consolidating here. Then we just had another daily close above these daily close, right? So we're starting to put in a little bit higher highs. Looks like a little change in direction, right? So we do have this Stoke wiggling around up here, but I'm thinking this thing could pull up, you know, at least to test this 18,000 range here, right? That was probably like your true breakdown zone once you started closing dailies below here, this 18,100 to like 18,500. So I was thinking that would be a good first starter target. We get over that, then I think we're heading for this 20K area. Of course, we get over that. Then we got 21,500, 22,500, 24 to 25,000. Once 25,000 is cleared, I believe that the bottom is obviously in. Personally, that would be a huge signal that the overall market bottom is in. So that's kind of my thought and thesis behind why I'm starting to long some of these. As long as Bitcoin does well, these mining stocks are going to do well too. Now, Bitcoin's pulled back. Let's check it out. I like to put this on the weekly. And let's go from top to bottom. You can use this little ruler tool over here. From top to bottom, 77% downside. That's a huge downside. But that is normal in Bitcoin markets. Throughout its history, it does pull back about 80%. So here's your big pullback, 77%. Now let's look at like a riot. Look at that, 95%, right? These companies just mine Bitcoin, right? So I think these are at a deep value buy. Riot blockchain is adding the most Bitcoin miners. I think they're getting up to 76,000 miners by the end of this year. So they're going to become the largest, I believe, by far. So they're growing quick. I like Riot. Bitfarms currently has the best efficiency as far as how many Bitcoin do they mine per exahash. They're mining like 135 Bitcoin per exahash, where Riot is mining 75 Bitcoin per exahash. Although Riot has a lot more exahash in their mining power, Bitfarms is a little more efficient. So I like that. So I like some of these for different reasons. So that's why I started building some small positions in those. But overall, why I think bottom's in and market's going to turn. The dollar currency index tells us so much. We can see, obviously, the DXY is a dollar currency index. It's a measurement of the dollar versus a basket of other foreign currencies. As you can see, over this last couple of years, the dollar has just been on an absolute tear. The entire time this happens, as the dollar strengthens, assets priced in dollars decline, right? So we saw the dollar strengthening all year and equities dropping all year, right? Almost an inverse. Now that the dollar is dropping, we've seen a little change over these last several weeks in what's happening in markets, right? Look at this. We're going up as that dollar's dropping, right? And Bitcoin has a very strong correlation to the dollar. So I love to watch the DXY. Also, look at that 10-year, right? So we're having a big pullback. We're going to find out pretty soon if this is going to bounce again like it did last time or continue coming to the downside, right? I expect this 10-year to keep coming down to this 3.2 to 3 area. I think we'll test in this area, maybe get a short-term bounce, and then eventually it's going to roll over. As the Fed pauses and then eventually cuts, they're going to roll. It's going to roll over. Let's go back to watching our positions. Today's pretty flat, so not too much movement. Might be a good time just to build a couple swing trades. I'm not seeing enough movement to really get some good scalps today. I could trade some options, but at first I just want to trade some spot stocks instead of getting into options where it's a lot more volatile. Remember, like I said, the first thing, I think you saw my first trade was a couple days ago on this account. I took a trade on the SPY with just 10 shares just so, because I wired in 25,000, but then there was some fees, so it started out at like 24,990. So I really just wanted to take a super easy, safe trade to get the account over 25,000, right? And then I'll progressively take some higher risk, higher reward trades as I build this account, but definitely don't want it to get below 25,000, or else I can't take day trades. And I really do like to scalp trade, and I don't like to be limited to 3 day trades per week. And that's what you'll be limited to if your account is less than 25,000. So just think about that whenever you're trading. You definitely don't have to start with 25,000. But that's another cool thing about crypto is there's no minimum and there's unlimited trading. But But if you are going to start trading crypto, I would recommend starting with Bitcoin. And then if you're going to go down the list, go to Ethereum next. Don't start trading a bunch of highly volatile altcoins. They trade like penny stocks. You can make a lot of money with them, but you can lose it just as fast. So maybe even faster. So don't start off trading highly volatile assets. It's not a good idea. Remember, this is a game of momentum. Trading is like anything else. You'll gain momentum, and as you learn more and more skills and you become better at exiting when you're wrong, that's really the key. It's not so much about being right all the time. Nobody trades with 100% accuracy. It's impossible. I doubt many traders even trade in the 90s. You will see some of the best traders and most accurate will trade in the 70 to 80% range accuracy, and that's fantastic. But if you have a good stop loss and risk reward strategy, you have to have risk management really tight. But you could actually be wrong more often than you're right. You could be wrong 60% of the time and still be profitable. Remember in that risk management video I did a couple days ago, I showed like the basics for risk reward is 1R risk, 3R reward, right? So your reward should be about 3 times your risk. If you trade like that, then even if you're wrong more than half of the time, you're still going to be profitable, right? So that's why risk management is the #1 tool for being profitable with trading. So I'm going to build a little bit more into this riot position. And I also want some more bit farms. These two, I believe, will do the best out of the next market. Little phone ringing there. Got some things to take care of here in a little while. Just wanted to start off with the trade. So today's a pretty boring day as far as trading goes. Let's see if there's any other things. Let's check out. I like this screener tool. So what this thing can allow me to do is look for stocks. Let's check out stocks that are, like 300 million to 5 billion. Small to mid cap stocks. And then you can look at these and see, what do you want to rank these by? You could say RSI is oversold, bullish engulfing candles. So that could be a signal of a reversal, right? So let's just click this bullish engulfing. None. Stretch this out. Let's go to RSI oversold 24. U-Haul. So this one could be something here. I'm not sure. Could be throwing off because it looks like we had some sort of reverse split or something, because the price dropped from $500 to $50 here. So some sort of reverse split happened, so that's probably throwing off those alerts. screeners. Let's look at some with the MACD Golden Cross. And then let's reduce this market cap. So here we go here. Bunch of stocks to choose from. So that's another way to use your screener to find some stocks if you wanted to look for a trade. You really don't have to do all of this. There are a lot of traders that strictly look for like super low cap stocks. So they'll like put this down here and look for like stuff under $1 billion, right? And this is where you can get some good, but most of these companies, you're not going to recognize any of these names. So you'll need some way to get some pretty detailed research. But look, there's my bit farms down here. I'm going to add some to this position. Thought behind here is just a little bit of an uptrend here. Something like that. Now I'm not trading this trend line really. I'll swing this position, have a little more flexibility. If it does make a new low, like if we break 48 cents, I'm going to get out for sure. And then I'll just be looking for another entry even lower though, because I do believe long term, the upside potential on this asset is massive. And especially with Riot blockchain as well. This company Riot is sitting on, I believe it was over $250 million in cash with $21 million in debts. They're mining over 500 Bitcoin a month, and they're selling about 400 of those to pay for operations. So their net gain is, they're sitting on an extra 100 Bitcoin a month and a ton of cash. And they're buying up Bitcoin miners like crazy. And Bitfarms currently is the most efficient Bitcoin miner, so I really like that one as well. CleanSpark was doing pretty good and performed pretty well, so I just wanted a tiny bit of exposure in that one. But basically, I'm going to continue building my Bitfarms and Riot blockchain positions for some Bitcoin exposure through stocks. And that's kind of my thought behind there. Go back to my trade. Let's look at some of these index funds. This is really where you should spend most of your time when you're starting, is really spend most time on these index funds. They're the least volatile, like look at this, maybe you're going from 394 to 397, right? You're talking about $3 moves here. Even this, off of this bigger move, you're looking at $5 per share on a almost $400 asset. So you have very low movement in this. So it's really hard to lose a lot of money unless you're trading options or something like that. But if you're just trading spot index funds, that's the best place to learn how to trade, really, is to just start with index funds that don't move much. Of course, you're not going to hit home runs. It's going to be hard to make a lot of money per trade, but even if you can make 10, 20, $50, $100, it's going to give you momentum and it's going to give you strength to show, that your strategies are working, right? You don't want to test out your strategies on highly volatile assets or stuff like that. So be sure to start with no leverage and index funds would be my recommendation. And then you can move into some single stock assets. But when you start moving into single stock assets, I would go for your higher market cap, your Apple, your Amazon, your Microsoft, Google, right? Some of these large banks, like a Bank of America stock, a Goldman Sachs stock, something like that. You got your large energy corporations as well. Duke Energy is very large energy corporation, not volatile. Some waste management, I think like the company Waste Management, also really secure, not volatile. So there's a bunch of companies that are not highly volatile, and especially these companies in the energy sector over the last year have outperformed a lot of these other companies. Let me see here, Amazon. So I'm going to get 10 more Amazon right there. It's a big old indecision candle here forming on the 30-minute. So it might be kind of a boring flat day, Not too much movement around here. A little boring. S&P 500 down by 5 points. Not much movement. We might see some more movement and volatility later in the day. Check out the VIX. Volatility index. That's what the VIX is. S&P 500 volatility index. It just measures volatility. We're pretty low down here right now. So expect some volatility to start creeping back here soon. Maybe push back towards this, upper 20s to 30 area. Normally when you see that, that'll coincide with a decline in stock. So you do want to watch out on that. As we can see here on the SPY, we've had multiple rejections at this level, right? So this would be a perfect level to get another rejection. Would we make a new low? I'm not sure. I think only if economic data worsens. As inflation comes down, the dollar is coming down, the DXY, these rates are coming down, right? I don't know. I personally don't think we'd make a new low, but we could. So it's something to watch out for. This line has been respected. This downtrend has been respected all for an entire year. Um, yeah, right at 12 months now. So definitely something to look out for. A retrace back down to 3,600 would be pretty brutal, and it would definitely cause a lot of these assets to decline in value. So I don't want to ride that back down. So I basically would say if we close a weekly below here, right, this previously weekly candle right here, where did this one close at? Closed at, or this open here is what I meant. Closed below this candle open at 39.56. We're currently at 39.63. So it's not far off. And it's not a death sentence if it closes below there, but it starts to not look good. It would definitely have further downside if we close below these wick lows. Now, this is a weekly candle chart, so this can take a little while to play out. But I'd say once you're below this 3,900 area, you're probably going to at least come back to this 3,800, and then we'd have to revisit it there, but maybe even lowered back down to like 3,700. And then maybe put in a higher low here and continue higher. So it's something to watch out for. I could also see us just grinding along here for a couple weeks and then breaking out as inflation, if inflation continues to go down, and the Fed starts to say, we're almost done hiking rates or something like that. I could see us having a little grind and then break through. So definitely something worth keeping an eye on. Check back over here, make sure I'm not losing some money. Most of these positions are down, but very small. Looks like my unrealized P&L is only down 20 bucks, so not a big deal, but something to keep an eye on. A couple of these that I'm in are volatile, even though these are very small positions. I have very small positions in these, and the reason why is I'm going to layer into some of those as swings. These Bitcoin mining stocks could take quite a while to recover, so those things could easily turn into weeks or months. But I think it'll be well worth it once they finally pop. These things absolutely explode, and I won't need a really large position in these to make a lot of money. Amazon didn't get filled at $89. Maybe we'll see a little more of a pullback. I would like to get some more Amazon, at least like 50 more shares of Amazon for this little swing trade. I covered that in yesterday's video of that setup. Just want to check out this daily. And the reason why I use these is I really like TradingView because it just gives you all the tools, a better picture, the chart. I can expand this and make it, full screen if I want to. It makes it easier for you to see, but I can easily visualize this. Something I'm noticing through the video is these wicks are a little hard to see. From my side, they're very easy to see. I might play around with the size of those so you as the viewer can see a little better, but overall, not bad. But yeah, on a weekly, this looks pretty bad. When I'm seeing this, looks like we're gonna make a lower low on the weekly close here, lower than we're not lower than these wicks, but we're lower than the close, and that will be the lowest close since March of 2020. So that's not good, right? This is what happened. This is what happened when the Corona crash happened, right? Came down to here. But that's another reason why I do think that Amazon is a good long-term buy or swing here. We're basically near COVID lows of 2020. This company did grow massively over the last couple of years, so I look at it as this is a massive discount on some really good stocks. I'm not saying it can't go lower. Of course it can. But when we look at this on a weekly, let's look at this weekly Stoke. We are near the lowest in history. We did go lower in 2014. But if you come here and you just look, if I just put a line in here, we could even include this one, right? Anytime that Stoke, weekly Stoke went below that line, let's check it out. Put this on log so you can see. So right here, the Stokes went below. If you bought here, could have rode it to there, right? We're talking from 100 to over 140, right? 40% gain there. Another thing I like is this bullish divergence setting up here on the weekly. But let's go further back. Another time it crossed below it right here. Would have been an excellent swing. Could have rode it to 111. From 85 to 111, 25, 30% gain. Right here, there's another opportunity. Now we did revisit those lows months down the road, but we never broke below. So there's just a few things lining up here. Also, BBWP is volatility indicator, and that's showing volatility with the red in the background is like maxed out red volatility, right? And it's just staying up there. So we have very high volatility. As this comes down, I believe price action will go sideways up, right? We'll have a reversing trend. Stokes can kind of turn around and go up. We've got bullish divergence confirmed here on that candle. But I would say if we take out that candle low, that bullish divergence is kind of pointless after that. So something to watch out for. But overall, I do think there's some great buying opportunities coming back to the market here. We're seeing the market start to turn around a tad. Maybe we can come back and close out the day green. I'm going to buy some more. I'm going to get rid of this. Maybe not. sometimes I don't like to watch a lot of different assets when I'm in multiple assets. I'm not. It's easier to watch a couple trades, go bigger on a couple trades, rather than spreading out. It's easier to watch, but overall, it's slightly less risky to spread out into multiple trades. But we will be wrapping up this live stream here in a little while. Not sure how long we've been recording. We got FSD Pharma, Clean Spark is starting to pull. There we go, there we go. I'm going to get a little more bit farms. Oh, we got quite a little bit of a pump candle there. I really don't want to chase that, see if it pulls back a little. Nothing's really breaking out today. Something to pay attention to is overall market condition, right? And it can tell you, see, look at that. Just got shoved back down here, right? So I do want to layer more into this position, but I don't want to chase it, right? So I could have market bought up there at 51.47, or you could buy here. Saves you half a cent. On this price asset, though, that's 1%, right? One penny on a 50-cent asset is 2%, right? So half a cent is 1%. That's that can add up. I mean, you can make a living taking 1% gains. So something to think about. So yeah, I want to get more of this. I do believe in Bitcoin trades 24/7, so we could have a rally over the weekend, and this thing could gap up Monday morning. Not really expecting that to happen, but I do think we are going to start to slowly recover, slowly but surely recover. I got a limit buy down here. Let's do another. And I want to get some more Riot. I'm really liking Riot, although they're a little inefficient on their Bitcoin mining. They're one of the less efficient ones as far as how many coins they mine versus how much energy they spend. Um, but this company also makes good money on energy credits. They sell energy back to the grid, so that's pretty cool. So a lot of these, it's clean energy sources, so I really like that too. Um, Maybe we wick back down into this area. say 424. Let's get another 100 of these. I'm going to check this Riot one out. Let's get into here. I don't think I've even charted this one in a while. So let's see here. Let's look at the entire history of this. So here's the entire history of this asset. It is at a pretty key inflection point here around this $4 range, right? Definitely wouldn't want it to see it. We start losing this $4 level, then you could see this. I mean, you could see a move all the way down to $2.50, right? So it's something to watch out for. Just because something is on a deep discount doesn't mean it can't go down more. An asset that's down 90% could go down another 90%. People thinking, oh, it can't go lower, can't go lower. Look at the Sears chart. Sears is a great example. One of the biggest companies. They were like the Walmart, 20, 30, 40 years ago. Everybody knew what Sears was. Now there's hardly any stores even open. They never really developed online and never really transitioned to an online business model. They were an old catalog business model. Well, people stopped using catalogs. That asset fell off a cliff from $100 below $1. So can't go lower is a meme. It can, always. So always pay attention to your asset just because it's on a discount. Even something like Amazon could. I mean, you saw what happened to Facebook this year. I sure didn't expect Facebook to go down 80% in a year. Especially a lot of people still use Facebook, very commonly used. A lot of advertising still going on there. So it was surprising to see them fall that much. Something I am on the lookout for here is a weekly bearish engulfing candle, right? This previous candle opened here, closed here. So we traded above that and then got shoved down the whole rest of the week. If we close under this candle, that's a bearish engulfing on a weekly. I might not want to sit in this anymore. Definitely caution. But I would probably put my line in the sand around this close, because that also matches up with this wick bottom here and this wick low here. If we started closing below that, I would exit and look for a lower entry. So that's just one way to think about it here. That's how I'm going to manage my risk on that asset. But overall, pretty flat and boring day. So don't really want to take up too much time here. We've been streaming for probably almost an hour now. And overall, just not too much action. A pretty boring day with the markets being this flat. I mean, when the Dow is not even moving by 100 points, there's not much action that day. But not bad to get some, at least for what I'm looking for, to build a couple of swing positions in this sector. Not a bad day to get a little bit of a pullback. Gives me another opportunity. Now, does that pullback turn into new lows or a new downtrend, we will see. Only time will tell. So it'll take a little time to figure that out. Let's look at another sector, just see what's going on. I really do like this oil and energy sector, and haven't built any positions in this yet with this trading account. Exxon has done absolutely fantastic like this whole year. They just put in an all-time high, and they're on a pullback now. So this is on the daily time frame. Looks like the previous couple pullbacks did pull back to the 200. So I would look for further downside here personally. I'm not saying it will come down lower. You know, we may stop around this 100 EMA. It's at 99.88. Either way, though, that's another 5% down. As you can see, we closed below this moving average here. Came up, tested it, rejected, closed below again. This one opened above that moving average, tested the 10 simple. Remember how I said we pull back into crosses? Bearish cross here, pulled back into it, rejected, now rejected again. It looks like we're going to close below this, right? So this one might actually be good for a little short. So I'll show you how we short here. Okay, so that's a short position. So as you'll see here, it shows up as a minus 10. Just wanted to show this for simplicity. But since I'm looking at a daily, this will be a slight swing into next week. I don't like that close though. This little formation to me is pretty bearish. Plus we have this cross. It looks like very soon we're going to have this red 10 EMA cross to the downside. Oh, I'm using the 9 there. The 9's a little more reactionary, so I like it. In a volatile market, I find it's better to use a 9 than a 10. Just my personal opinion. You can play around with those as you want. All you got to do is click this little settings button, and then you can play around with those settings on those. But see this rejection. So then pretty soon this 10 is going to cross to the downside of this 55 if it doesn't get back up above it. So to me, it looks pretty bearish. Looks like we will at least come back and test this next moving average around $100. That also matches up with this previous high here. So, and another high here. Currently, we do have this high, so that is something to look out for me. We do have a little bit of a high here, so it could be a bounce area, but with us consolidating below that 55 EMA. Now remember, most people use a 50, and the reason I use a 55 is because it's a little less reactionary, so you get faked out less on a 55 than using a 50 moving average. So that's one of the main reasons I like to use that. But just looking for it to come down a little bit, right? We got 10 shares short, pretty simple. If it comes down to around $100, we'll make like $40. Really small trade, really low risk. But that's why I wanted to start this account like that. I want to show everybody that you can make a little money with low risk, and you can learn using low risk strategies. Now, I'm not saying to jump in all these blockchain stocks. These are highly volatile, highly risky assets, but I'm just doing this to grow my account a little bit. But you could trade something like an Exxon, an Amazon. You know, we looked at some of the others. The index funds are the safest by far. Just trade the SPY and the DIA. ticker symbols, those are your two safest bets, right? The Dow Jones Industrial Average Index and the S&P 500 Index are going to be your safest bets. Let me break real quick. I'll be right back in 1 second. Jump back in. Clean Spark moving a little, up 3% on that one. Everything else pretty flat. Clean Spark's okay, you know. This is another cool tab. This markets tab shows you top gainers. These biopharma stocks can be amazing, but you have to have some really good news information on these. You know, like look at this stock went up 187% in a day. I don't know what they did. Positive safety data. So they had some positive safety data, apparently. So these things will pump like astronomically off of some releases of data. Let's go back and see if we're running into any resistance there. Yeah, it kind of peaked at this previous high. Let's look at this asset. This asset's only known a downtrend its entire life. So something like this might be a good area to short into. Of course, you'd have to manage risk. And off of this candle, there's not much on the daily. Let's look at it on the hourly. Not much there either, right? Just straight up. Let's go down to the 5 minute. Even there, you know, there's not much there. You do have kind of an island top on this 5 minute, but it shows me there's not much trading volume in this asset anyways. I don't know what the market cap is on this. $32 million free float, 38 million shares out. So this is only a $140 million stock. That's pretty low cap. But either way, this would be, you know, a very high risk trade anyways. I don't know anything about this company. It looks like they're making some breast cancer medication. You can click on these articles and read through them. So it could be a great treatment for breast cancer. So with these, I mean, I don't mess with these. I'm not going to short this. Some people can. You can see why. It's got 187% gain in a day. Why wouldn't it give up like half of that gain at least, right? I see the theory behind it, but a lot of times you can really get it handed to you. I don't know much about this. It seems like a low cap stock, and if they are making a really good breast cancer treatment, then this thing could keep going. So I don't want to just short random stocks and things I don't know about or long them, right? Looks like some people got in here, and you could have caught the breakout if you caught the news. Sometimes those plays can be good. I will play those every now and then, but overall, going to start off a little safer with this account just so I can show how to manage risk, right? I'm not going for any big gainers. I'm up $20 today, right? This is nothing even really worth posting about. But the whole point of this is to show that you don't have to go large to make a little bit of money, right? And I do have, I don't know, maybe $10,000 in exposure to the market right now. But because it's spread out, I don't have any one asset that's up or down a lot, right? My largest position size is in Amazon, and I've only got 50 shares of that, right? That's only $4,500 position in a very high market cap blue chip stock, right? So when you're starting, your largest position should be in your least volatile asset or your blue chip asset, your high market cap asset. If you're a brand new, don't trade anything but the SPY and the Dow Jones Industrial Average until you notice that you're consistently profitable month after month. 1 month of profits could be pure luck. Month after month after month, okay, we got a trend. Remember, three is a trend. So I would say if you can trade successfully 3 months in a row, your strategy is working. Maybe you want to move into some more profitable, a little bit higher risk assets. Start trading like an Amazon, an Apple, a Microsoft, stuff like that. One of the guys I learned from literally only traded one asset, made over $10 million trading just Microsoft. So you don't have to trade a bunch of different assets. I prefer to do it. It makes it a little more fun for me, but you definitely don't have to. You could make. There's people that make millions of dollars trading just the SPY. So find out what works for you. What do you like the best? What keeps you interested in it? What keeps you watching? And just have fun with it. But overall, I think we're getting to an ending point here. I think we've streamed for over an hour. So thanks for joining today. I'm going to try and do these a little more often. Hopefully the next one is on a much more exciting day. But overall, the challenge of this is to grow this account, right? I wired 25,000 in here 2 days ago, and we're going to see, I'm going to show how we can grow this account starting with some very lower risk trades, and then we'll move into some higher risk, higher reward trades later with larger position sizes, options, things like that. We can use a little margin trading, a little bit of leverage, stuff like that. But I don't want anybody that follows me to start off doing that because those are more advanced techniques, and most people will lose all their money. And it's there's like a common stat out there. I think it's 90%, 90% of traders lose their money, right? Don't be a statistic. And the reason why is because they go in trying to use advanced techniques. They lose their money, then they become discouraged and they give up. Even if you lose all your money, you can make it all back. But you don't want to do that because most likely you'll just give up. You're going to get discouraged and you're going to feel like, oh, this isn't for me. I'm not any good at it. But if you start off small, even if you can make $5, $10 a day, no, that's not going to pay your bills. but you're starting to see a trend, and then you'll notice that some of these strategies will work. And then over time, you can increase position size and then move into a little more higher risk assets and things like that. But do it over time. For me, this has taken years to get good at. I've been trading actively for 5 years, and I would say it easily took me 3 years to get good at this and to become consistent with it. And my main challenge was risk management, and it's the main challenge with probably almost every single trader is going to be risk management. You'll talk yourself out of being wrong. When you're wrong on a trade, you got to get out. And if you don't get out when you're wrong, you're going to lose your money, and it's not going to be a fun process. So be sure to pay attention to risk management. I put a video out on that recently. Please like and subscribe. You can even click that little bell on my YouTube channel, and that will notify you when I'm going live. I tried to do this video live in YouTube. I was unsuccessful with the YouTube studio, so I need to learn a little bit more about that. I'm currently using OneStream.live, so I can record this and then blast it out to multiple networks. But that's why this one will show up a little late probably on YouTube, because it is not live on YouTube. But I'll figure out how to get that. I'm also working on getting some more streaming, like Streamlabs I've heard is better than what I'm using currently. So I'll improve, and the streams will improve over time. But for now, get your account. I'm going to get a link in there in the description of the video. I'll put some links in there so how you can get some free stocks and free crypto through starting a Webull account, or you can get free crypto by starting a Coinbase account. So I'll put some links in the description of this video for y'all. If you need anything, just post in the comments. I do check those every couple of days, so I'm happy to help with anything. And just stay safe and stay profitable, right? Just stay safe out there when you're trading. This is a bear market, so there's not really much direction. There's a lot of chop. Overall, the direction has been to the downside for a year, so don't forget we're in a bear market until confirmed otherwise, really. So thank you very much for joining us today, and we will see you next time.